Welcome back. It really bothers me that music doesn't fade out. I need to make it fade out faster. Whoa.
I think you just got to come in harder with the intro.
I have my live stream not muted over here. Whoa. Okay. Episode 46. Welcome back. So tonight we have Jack Duffley on again, who we had last time after we both reviewed each other's portfolios. Let me bring Jack in here if I can remember where the button is. That is down here. Hey, Jack.
Hey, guys. Thanks, Trey, for inviting me back on. It's exciting.
Yeah, and for the really clustery intro.
No, I love it. We're on a different platform this time with StreamYard, so it's like extra suave.
Oh, you were with us when I was doing OBS. Oh,
yeah.
Man, this is so much better.
I started, per your recommendation, I started using StreamYard for this new joint channel I'm doing with a couple other YouTubers. Punch Card Investing, a quick plug. We talk about like value investing and stuff, but I've been using StreamYard for that, and that's with 5 people, and it is just so amazing how easy it is to use. So way to go, StreamYard. I know.
Yeah.
It's like when I first discovered it, I was like, wow, this is like how all of the streaming should be done. I don't understand why anyone does it any other way.
I'm 90% confident that's what Meet Kevin uses for.
It is. Yeah. That's how I found out about it.
Yeah. Because you can pump it to other platforms as well, so it's super slick. So nice upgrade.
Yeah. This is going to YouTube and Twitch,
nice.
Why not?
How's the Twitch following going? I've basically never used Twitch.
I have no idea. I logged in to set up an account and we streamed to it, and that's about it.
Efficient.
Yeah.
So if you're watching us on Twitch, go ahead and hit us up in the comments.
We have gotten some engagement from Twitch, though.
Randomly.
Just comments and stuff like that. So.
Yep.
Yeah. All press is good.
So since last time you were here, one big milestone, you hit 1,000 subscribers.
Yes,
on YouTube.
Subs. Yes.
So congratulations on that. That was awesome.
You.
I see it's at 1.38 right now.
Well, I gained another 10 in the last. I'm kind of confident that that channel I mentioned, Punch Card Investing, all of us have suddenly gotten about like 20 extra subscribers in the last like hour out of nowhere, and we're pretty sure it's spam. So I don't know.
There might be something going on, because I got like 4 in the last couple hours, and I'm like, where did these people come from?
Okay, in that case, I think it's something that YouTube did, because there was a notification that said we're changing how we view subscribers. So maybe it's just it's benefiting everyone.
Yeah, I checked once and I'm like, oh, I'm up 2, and then I checked like 30 minutes later, I'm like, another 2? That's weird, but okay.
I guess they're all legit then. I love it.
Cool.
Great.
Well, that's awesome. So any like, how's the experience starting the new channel?
It's been pretty good. It was kind of a knockoff of Millennial Money, the one that Meet Kevin,
which of course is a knockoff of ours. So
yes, absolutely. That's like the one with Meet Kevin, Jeremy, Graham, Stefan, and Andre Jick, and they just chat for an hour or two and do a live stream kind of casually off to the side every single week in a similar way to what you guys do too. So we wanted to do one specifically for value investing, and it's been so far so good. We're 2 episodes in. Nice. We're already almost at I think we're approaching 800 subscribers already. So two weeks in, so it's been good. It's because we can all kind of point our subscribers into the same spot, so we get a nice jump start.
Nice.
And hopefully that a rising tide will raise all ships in that case. That's kind of the goal there. And it's also been nice just like chatting with other guys who are in the value investing space and learning from them and what they're seeing. And overall, it's been great.
Nice. I mean, that's my favorite thing about this podcast is like we just get to invite like cool people on. Like we had Antoine Martel on last week. Mm-hmm. I don't know. I'm sure you're probably familiar with him if you're in the real estate content.
Only vaguely. Was that the one about multifamily investing? Is that right?
That's what the title was. And then I learned that he actually doesn't do a whole lot of multifamily. It's just his YouTube channel is all multifamily.
Gotcha.
Yeah.
It's really
in real estate though.
Yeah, it was really interesting.
Yeah.
We learned a ton. We've been doing a ton of research after that conversation.
Like, documenting conversations like that.
Yeah.
Or like what you're already doing. It's handy because it's like it's very easy to create content, and you can learn lots of things about whatever it is you're talking about at the same time. So it's just a win-win all around. And
and
then listeners hopefully can learn a thing or two as well.
Exactly. I think at the end of the day, it's selfishly more for us. But if people end up listening and getting some value from it, then fantastic.
I mean, that's capitalism.
I would
great.
love to. I need to take the time to just try it out, but I'd love to have someone that could just like take some of these long form videos and cut them into snippets and release them as clips.
That's what we've started doing as well with that channel. I've been doing that part.
I've just been too lazy to sit down and listen to the hour-long thing and cut all the stuff out.
What I'd recommend, since I know you've been experimenting a lot with shorts, the first video we did for that clips channel was a short, and it immediately got 500 views. And I think YouTube favors channels that start off with shorts and don't have any other content. I'm not too sure. It's kind of a hunch. The Spiffing Brit did a interesting breakdown recently, I think 2 months ago, where he said that he and a buddy started a bunch of channels and were experimenting with how to grow them very quickly using exclusively shorts. And apparently channels that are just shorts tend to be doing really well lately. I don't know what the science is behind it, if there is any.
I keep trying to convince myself that shorts don't make sense, but then every single week one of them hits off and I get multiple subscribers from my shorts. Like I get more subscribers from my shorts than I do my regular videos.
And some channels have completely pivoted to that. Like Legal Eagle, he's a big law oriented channel. He talks about tons of legal issues. He's an attorney himself, but he, I think, has switched entirely to shorts, and he's got like 1 million subs or something like that. I haven't checked anytime recently, but it just shows that there's a lot of attention going towards it and short form content in general. And if you can find a way to pump it out, really the hardest part about short content is fitting it all into a minute. That's the hardest part. The editing and stuff might not take a while, but actually delivering it can take
hardest part for me is just ideation, coming up with the ideas.
An idea that fits in a minute is really the thing.
The fitting in a minute's not too hard for me because I just tend to not be someone that, like, it's hard for me to make a 9-minute video. It's really hard. So it's easier for me to fit something in a small piece, but I've gotten it down to where I can film, edit, and release 3 shorts in 20 minutes.
Well, there you go.
Which is great.
If you got it down to that efficiency, then that's awesome. When I've done shorts, it's probably taken me, or dedicated shorts, probably taken me about a half hour per short, start to finish, posting and everything.
I've spent a lot of time lately on, just because I'm releasing 5 videos a week now, I've spent a lot of time recently on just like automating the process. So I have Premiere Pro templates for regular videos and shorts. Yeah. So they basically all follow the exact same structure. And then I have a little command line tool that I type, and it copies all the footage over from where Roland dumps it to my hard drive, because I record straight to the hard drive.
Yeah, that's nice. You got that extra.
So I record straight to the hard drive. That's great. And then I just have this little command line tool that does that, copies all the folders over, copies that Premiere Pro template. All I do is drag the footage over and basically drag it on the timeline. And for shorts, I just cut out the section that I wanted.
Oh, sure.
Because I normally do like 3 takes on each, typically.
The hardest part, I think, about shorts is getting that hook, because it's the whole video is a hook, basically. So you got to like nail it in the first like 3 seconds, which can be hard to do, especially with a nichier topic. But like what you're doing, if you're shotgunning a handful, as long as you get one stick.
Yeah, I do 3 a week, and typically one does well.
Yeah.
This week I'm experimenting with, so for the longest time when I published the shorts, I unchecked the little box that said like publish to subscriptions and notify subscribers, so it didn't, spam people. But this week I actually stopped doing that. So it's actually going out on subscriptions and notifying people. So I'm testing that out this week.
So it was not pushing it to your subscribers.
No, it would show up on like your browse page, but it wouldn't show up in your subscriptions feed or notify people.
And did you do that intentionally just to try it out?
I did, yeah.
Okay.
Because I was concerned about just like spamming people with like really short form sort of content.
Yeah, I hear that.
But when you think about it, like, well, one, I based this experiment off of what Gary Vee is doing. I looked at his, and he's been pushing out a lot of shorts, and I've been watching a lot of his shorts lately too, which is weird because I was always like, vertical video on a desktop, which is where I primarily watch YouTube. Like, I'm never going to do that. But I watch a ton of Gary's shorts on my desktop, and he publishes out to subscriptions. So I'm like, might as well try it. And the first one went out yesterday, second one today, and they've both been doing decently. It's hard. Here's my big problem with shorts. It's hard to tell if a video is doing well or not now.
Yeah.
Because
Yeah.
I release 3 shorts a week and 2 long form videos a week. And like my average watch time for videos is so low now. All of my longer form videos are great, but not really.
Oh, sure. Right. It shows the average watch time
Yeah,
being
it
amazing.
skews your average in a lot of different ways, which is interesting.
Sure. Have you noticed, I haven't looked back at how your shorts have been doing. Like, is it just like that 2-day pump, 1-day pump, and then it's done? Have any continued for a while? Like, what are you seeing there?
Yeah, it depends. Most of them have been that sort of like 2-day pump, like 24 hours to 48 hours in. But the one I released yesterday actually has just been like a consistent trend up.
Mm-hmm.
And like a lot of it in the beginning was from browse features, but now it's like pretty consistent on shorts. So it's not following that same like spike and then flat sort of model. So I'm curious to see how it keeps going. It's been the first one that seemed like a lot more almost like sustainable growth.
Yeah, I just don't know how it picks winners. Because like you're saying, it doesn't push all of them. It doesn't push all of them, and for the ones it doesn't push, it's not like it gave it a huge sample size to sort of make that call, So that's what I don't understand.
I haven't figured out how they do it either, but I have like one a week that gets multiple hundred views and typically 1 to 2 subscribers from each. And I'm like, until that stops happening, I'm not going to stop releasing them.
Yeah, and that'll do it if you can keep that up. And then if you get one that goes really big, which who knows what the code to that is, then that'll be great.
You got to wait till next April Fool's Day and release a video about me, Kevin, suing you.
Yeah. How did that one do? I think
that one did great, and then I killed it. I killed it 7 days later.
Oh, you deleted
7 days later, it was still getting a lot of traffic, and some people were starting to get frustrated that they were clicking on it, and it was an April Fool's joke. So I added hashtag April Fools into the title, and it just went flat from there.
Yeah. I've noticed when, well, I don't know if I've noticed, but I'm not sure if YouTube likes hashtags in the title. I think we talked about this a while back, off camera. But I've noticed if I ever do a hashtag in a comment on someone else's channel, it basically disappears. So I don't know what YouTube does with hashtags in titles specifically, because I know in comments, I don't think it really likes them. I was using hashtag Burr a lot for like Federal Reserve, and anytime I did that, it would the comment would disappear. So I bet it does something similar for titles, like it won't push them if it's a hashtag. Because I don't know, do people search hashtags on YouTube? Because I don't think so. I certainly never have.
Test this out. We're going to change that video from hashtag April Fools to just parentheses April Fools and see.
I wonder. That'd be funny. That'd be funny if it still works.
Yeah, I'm finally at the point where like I'm getting enough impressions on things that you can actually test things. When you're small enough, like people like test out titles and thumbnails. You don't get enough impressions. Like until you get 100 impressions per video, you really can't do anything.
Yeah, I recently switched up my thumbnails a bit. Be a little more like deep red background, a little more bold.
Made it way easier to cut your face out for the thumbnail for this one.
Yeah, I noticed that. I was like, you probably used one of my new thumbnails. I'm just using background remover, like the website, and that's been super easy to do that. I didn't realize how easy it was to actually do that just by putting it on a website. So I've noticed definitely an increase in my click-through rate by like a couple percent. So I'm going to definitely keep that up and see how that keeps going. We just got to keep that momentum going, and it's been good lately. So I've got to keep it moving before I actually start my new job. Of course, becoming a full-time attorney soon. So
did you pass the bar?
I did.
Congrats.
I did a
live reaction to it. It was. Great.
It wasn't a live, but it was real.
It
was pre-recorded, but it was real. It was an authentic reaction. But
that's fantastic.
Thank you. I did pass, and then I'll be sworn in on May 12th, and I'll officially be an attorney for the state of Illinois. So, and then I'll be starting as a full-time real estate associate thereafter. Right now, I'm working part-time as a clerk, so. It'll be mostly the same work, just way more of it.
Nice. Congrats. That's awesome. Sorry, what were you going to say?
I was just going to say the question would be, how do I keep the routine of making videos? Because I don't want to let that slack.
Yeah.
And I don't know if it means just outsourcing some editing or something like
Mhm.
that. I should be able to keep up 3 videos per week, no problem. Maybe if there's a week or two that I have to do 2 videos, but I should be able to
Yeah.
do it. I just obviously can't have my work suffer since I'm just starting out. That would be
What's
bad look.
what's the biggest part of making a video for you?
Oh, editing. It
Editing?
takes
Interesting.
me around at like 20 to 30 minutes to film, maybe a little bit of planning before then. No more than like 10 minutes probably to plan. Well, I shouldn't say that. Usually I'll think of an idea from reading something or watching
Uh-huh.
something, and then I'll find some sources on that afterwards. So it's kind of a stretched out, spotty
Yep.
process for planning. But then when it actually comes time to sit down and film, it's like 20-ish minutes, sometimes 30. Never more than that, though, pretty much.
Yeah.
And then editing is anywhere from like in a quick video, like an hour and a half. And then otherwise, maybe like two hours. And then about like 30 minutes to actually, less than 30 minutes to actually post it, go through, make all the timestamps, and write out a description. That can take a little bit of time, and make a thumbnail, of course. So
Those
it's all,
timestamps and cards are the most time consuming part.
yeah, but I think it's so necessary because first off, it's a final
It is,
proofread. You got. I listen to myself on double speed just to make sure I didn't do anything wrong or sounds messed up somewhere. That's what can really draw out the process. If I notice a mistake right at that moment where I'm about to make it public, but I notice there's something wrong.
Normally
Never mind.
I'm just like, fuck it, release
No,
it anyways.
I go back
Just
and
do it.
re-render. I'm like, what if this video goes viral? That's kind of the approach I take. Like, it will not go viral if there's an awkward
I
mistake.
just go the opposite. I'm
That's
like,
too-
it won't go viral.
Yeah. No,
I got
I'm
another
trying to-
video tomorrow.
I'm treating it, and if this, all it takes is, I don't know how YouTube does it, but if it means that gets me an extra 30 seconds of average watch time, that could be a difference maker.
Yeah.
So that's how I kind of look at it. Not that I'm a perfectionist, but if there's something awkward that I can quickly fix and re-render the video and then repost it, copy
Right,
paste
yeah.
everything over.
Mhm.
It's annoying, but it's not
Yeah.
terrible. So all in all, it's probably about a 3-hour process from start
Oh,
to finish
okay.
for me, for like a 10-ish minute video. It's usually like 10 to 13 or so for most of my videos now.
Yeah. I've been scaling my process back a lot just so I can like make the videos and still not take a ton of time. I've been
Yeah.
doing most of my videos in a single take lately, which has been really nice.
I'm not up to that
It
talent
makes them
level
longer
yet.
too.
I have noticed since I've switched to my new set,
Uh-huh.
I switched up my set a little bit. For some reason, now that my hands are in the shot, I feel like I can have more of a conversation. It feels a little bit more natural.
Uh-huh.
I don't know. I don't know why. But I have noticed that usually I'll end up with about 20 minutes of footage, and that's how it's always been for me. I end up with about 20 minutes of raw footage, and it's cut down from anywhere from 8 to like 12 minutes most of the time. Lately, it seems like there's a higher percentage of my footage I can actually use since I've switched sets for some reason. I don't know why. Actually, I do know why. It's because I have my laptop on the table now. I couldn't have anything in front of me on my old set.
Yep.
So then I could pull something up real quick.
Right. Yep.
And that can help if I'm pointing out data. Otherwise, I'd have to remember it off the top of my head,
Yep.
Which could be yucky.
Interesting. So you have a rental property in Indy, right?
That's right. Yeah, it's a single family home.
What's the cash flow on something like that look like? Actually, can you just like run us through like the basics of the property?
Yeah, so it's a single family home in Indianapolis. I bought it in July 31st when we closed. It was $85,000 off market. Probably was worth about $100,000 when I bought it, maybe a little bit less. It needed some minor repairs. It had like a leaking condenser. It had there's really that was probably the biggest thing is the furnace itself was actually leaking for some reason, and the previous landlord didn't do anything about it. So and there's a tenant in this property, by the way.
Okay.
So we inherited a tenant. Patch up a spot on the roof. The gutter was draining right back into the side of the building, which was stupid. So we had to move that pipe out. It was a bunch of little things like that. Mm-hmm. Paint in the bathroom. The bathroom was peeling, so we jerry-rigged the exhaust fan to come on when the lights come on. So we did the kind of basic things like that. Nothing super major though. So that probably cost, I think, if I remember the numbers correctly, it was like $2,000 worth of repairs all told. So not very much. And then the property is easily worth $100,000 now, if not maybe even closer to 110, just because of how stupid
Nice.
things have been nationwide.
What are you talking about?
But yeah, but $100,000 is probably what it was worth. That's what I've been saying. If I put it on the market right now for $95,000, it would sell within 24 hours because Indianapolis is super hot for that sort of. That's kind of, I don't want to call it mid tier, but that's a very hot commodity. Is that sort of $100,000 range single family home because you can get decent cash flow on it.
Right. Hence the question I'm asking you.
Yes. Okay. I'm setting the scene. So, but I bought it in cash, sort of. I used a HELOC with 2.25% interest right now to buy it. So that's kind of my financing on it. But I'm just going to pretend like it's not financed. It's all cash. We just signed a new lease for 1025. It's a 6-month lease. It was previously at $950. And market rents are probably closer to like 1050, 1075. So we're letting this tenant keep somewhat of a deal, as long as she keeps paying and everything's good. There was a little bit of stress there when we bought it. She was behind on rent actually the first month that we were set to close. So that was the extra sort of risk we were taking on with this deal, is that the tenant was behind. This is in the midst of the pandemic, and who knew what stimulus was going to come out. So that was the risk we were taking. So to offset some of that, we actually negotiated a credit with the seller to where if the tenant didn't pay August rent, then we'd get to keep a 1 month's rent as a credit from the seller. So we kind of insured ourselves a little bit that way. Then the tenant did get back on track. I don't know if she actually ended up getting rental assistance. I don't think she did. But she got a new job and got back on her feet, and then everyone was happy. So because we were insured by the seller in that way. So that's a kind of a side point about creativity, I guess. But
yeah, no, definitely.
All right. I'm going to get to the cash flow numbers now. So let's see. Property management is about 10% of rent roll, which would be about, we'll just say $100 or so for property management. There would be a renewal fee if we end up renewing at some point, which would be equal to 1 month's rent. So that gets a little expensive. Or sorry, it's half month's rent for renewal, full month's rent for a.
Oh, they charge for lease renewal.
They do. They do. But it's a pretty solid management company. They have like full not on-site, but they have their own maintenance staff, which was kind of important to me because I don't really know anyone out there, or I don't know a bunch of contractors out there, I should say. I know a good number of people now, but so you're paying for that a little bit, but it's a lot of peace of mind, and it keeps repair costs down quite a bit. Then I do about 10% vacancy. Then probably about 7.5 to 10% capex, pretty conservative, I'd say, given that the home's from the 60s, so it's not like super old. If this was like a 20s or 30s home, of which there are many in Indianapolis, then I might be a little bit higher on that capex at this low of a value. And trying to think other expenses. Insurance is what's the annual premium? I'm trying to remember what it was when we first set it up. I think the annual premium's like something around $600, which is pretty expensive for that. But because it's held in an LLC, insurance rates are just quite a bit higher, unfortunately. And what other expenses am I forgetting? And then there's like the legal maintenance costs as well of like to renew LLCs every couple of years. I just chalk it up to like $10 a month for that. And property taxes are about $1,400 per year.
Okay.
And that should be that's everything I could think on the top of my head because no loan. So all in all, we're probably looking at like something like an 8%, 7% return, cash on cash, because there's no debt on it. If there was decent debt on it, that would be a much higher number. But if you kind of factor in the HELOC debt, it gets a lot higher, but that's kind of accounting wizardry at that point.
So you're looking like $700-800 a month in income?
Yeah, something around there. I'm pretty much pouring all of it back into reserves. Otherwise, I'd be a little bit like, I know right off the top of my head what my cash flow is exactly, but I'm pretty much putting it all into reserves right now.
Interesting.
Just to build that up.
It's like we're buying an indie.
Yeah, so I ask because so all of our investing is in Florida, and it's appreciation based, right? Like our cash
Right.
flow is basically zero, and honestly, if we bought one of the exact same properties we bought now with all the craziness that you referred to in the market, we'd be negative cash flow.
Yeah.
So after our talk with Antoine last week, we're thinking a little bit about maybe we should look at somewhere like Indy, which I don't know Indy well, but I know Indiana pretty well.
Mhm.
And if you need any introductions to people, my uncle is actually a builder out in that area.
Oh, that'd be fantastic. Yeah.
So like that area is interesting. And then we were talking to him, and he was saying about like pretty much anything under 150,000 is like where the cash flow is found.
Yeah.
We're like, oh, that's interesting. You're talking about you bought it for 85,000.
Yeah.
That's our down payment on these houses.
It's nuts. It has a pretty big lawn too, so it's like it's kind of nuts. It's
so
you
it's
have to be
something
careful,
we're
though.
starting to look at.
You definitely have to be careful. Indy's not perfect. I got it in probably a C area. It's not going to appreciate a bunch, if at all.
Did you look at other areas in Indiana?
No. Well, sort of. I've looked a little bit at like Hammond, which is like on the border, because I'm in Chicago, so like it's right there, and that's where I would think the first destination for people fleeing the state would be, just because it's right on the border, or fleeing Chicago, who still want to stay near Chicago. I haven't spent a lot of time there. That would be the next area I would look at more closely. I've seen some like wholesale deals pop up every now and then that look enticing, but that can be a pretty dicey area too. It's not quite an extension of the south side of Chicago, which is notorious for being a huge war zone. But there are decent areas in Lake County, Indiana, that you could find some deals there. I just need to know what the actual good pockets are and good bad pockets are. I'm not too sure yet.
I was curious because one of the areas I'm actually investigating a little bit is Fort Wayne.
Sure.
Which is actually where I was born. It's a lot closer to where I like early grew up. And it's been rated as like one of the best, like highest quality of living places in America, like multiple years in a row.
All right, cool.
It's crazy. And the prices are actually even cheaper than Indy.
Sure, because it's not quite as dense.
Yeah, so I was curious if you looked at that at all, because that's an area that I'm kind of intrigued by.
I'm not really looking outside of Indy for at least a little while. I'd rather build up now that I have my property management.
Now that you have one in Indy, like I would do the same thing. Yep.
It's the hardest part was finding a manager, finding a broker, and building a team there. And now that I have that set up, it's like, all right, let's just get another deal and put it right into the funnel, essentially. So I'm going to focus there. If there's something that pops up in another area, I'll certainly be open to it. But it definitely is very liberating investing out of state. I know you do as well. In that, I don't want to say out of sight, out of mind, but it forces you to create decent systems to where like you don't have to be doing everything, or somehow set expectations with tenants to realize like I'm not going to always be there. So like I need to know how to handle things when things come up, or have someone who could take care of it. It's kind of the who, not how approach. Which it's been really, it's kind of a mindset shift that's been super important for me. I think it will be very important long-term in building a much bigger portfolio from there. Yeah.
And it's been interesting for us in Florida because we're able to actually do all of our management. So that, we pay ourselves 7%. Well, I mean, technically we still have to pay ourselves because it's a different LLC that's doing it, but
sure,
we do all of our management ourselves. But that's one thing that I wouldn't be able to do in Indy, most likely. I don't know though. I might still be able to, because like the stuff that my dad does it in Florida, and a lot of the stuff that he does is really just like stuff you'd hire like a handyman for, like a general handyman type person. So I don't know. I'm playing around with the idea of like whether we could actually pull off remote property management on these things. Granted, I'd have to scale myself, which I need to hire someone to replace that. But
I mean, you could, but you just have to have a team of some sort there, whether that's handyman, contractors, whatever, or you just have
exactly. And what we do here is like we have my dad basically, so he does all the on-site stuff, and he's very handy at a house, so he can go in and diagnose things and fix small things and this and that. And then I have like contractors for every single other thing listed out. And those take a little bit to build up, but once you have them in an area, you have them in an area.
Right. Same sort of deal with the manager. It's just it's the same process. You're building a team. It's just, you have to build a bigger team of more people, which can
Right.
take a little more
Yep.
time, but end result's the same.
Yeah.
Only
Yeah,
in
we-
your case, you have less management costs. Well,
Yeah.
yes, you're paying
And
them,
we
but
were
you know
gonna-
what I mean?
We were gonna pay a manager in Florida. It's just like everyone that we talked to, I didn't like.
Yeah, it's
Like,
hard to
the
find a decent one.
The focus was on like investor happiness, and personally, like I want a manager
Mhm.
that's focused on tenant happiness because that's the only thing that really matters.
Oh, I found there's this one manager in Indy. I think there's a couple actually, where they charge like a flat fee. It was like $50 per door or something nuts.
Mhm.
And like flat fee doesn't matter what it is. $50. You're like, I mean, what are you really getting? But
Yeah.
had all these glowing reviews on Google from investors. Like everything's great. So I'm like, what's the deal here? I talked with them a little bit, and then by chance, I walked through one of their investors' properties that was up for sale on the
Uh-huh.
MLS, and my broker knew it was managed by them. Was like, yeah, I remember you asked me about these managers. Well, you'll see. And we go in there. It's a dump. It clearly hasn't been walked through. There's bugs everywhere, and there's a tenant in there too. So clearly they haven't done a walkthrough in forever.
Jeez.
Tenants complaining about how like nothing ever gets fixed, and had their oven open to heat the room because the furnace was out. It was just ridiculous.
Oh my God.
Completely ridiculous, like slumlord level
Jesus.
stuff. So like, if I
Yeah.
this is where you really got to have boots on the ground when you're
Yeah,
first coming to
exactly.
know a
Yep.
market, because I really glowing reviews online, and like you never know until you actually see their work product, which
Yep.
the only way you could see it is if you see units.
Right.
So
Yep.
you got to get to know the area a bit, and also talk to brokers, see what they have to say about companies, because they're dealing with it all the time too. And then eventually came out to a very solid one
Mhm.
that didn't have those problems, and so far so good.
Nice. Cool. Yeah, because we're looking a little bit at like, okay, we have this real estate business and it's break even-ish cash flow.
Mhm.
But is there something we could do to increase the cash flow of the business that then we could cycle that back into appreciation-based properties?
Yeah, I mean, reducing expenses like you're suggesting, that's certainly one way. Have you looked into flipping at all? That could be a way to produce income to then maybe reduce your debt position so that you have more cash flow, if that's what you're worried about.
Yeah, the only problem with that is it takes a lot of time.
Yeah, it does.
Neither of us have that much time to dedicate to it.
Sure.
We did start looking at, after talking to Antoine last week, he turned us on to wholesaling, which I was totally unfamiliar with.
Yeah.
Oh, that reminds me. That was a question I was going to ask you, Jack, because
Mhm.
you mentioned you've seen a couple of wholesale deals pop up.
Yeah.
Where did you see those pop up?
I think, how did I come across the group? I don't know if I Googled Indiana wholesalers.
Okay.
You can Google a lot. Many of them suck, but like this one, I really don't know how I got on the email list, but they just
Interesting.
blast an
Okay.
email. They have a Facebook page as well. Maybe I came across it on Facebook, or I was looking up like Indiana
Yeah, interesting.
Pulse. Like, yeah, you just got to search pretty much.
Yeah.
I don't
Justin,
know if
that's
there's.
something we should look up in Florida.
I'm sure
Yeah.
there's a bunch in Florida right now, I'd imagine, because there's just such demand for properties.
Property values.
Yeah,
The appreciation we've had on our properties is like nuts.
yeah. That's something you're probably not going to get in Indiana.
We bought both
outside
of
of-
these houses for $265, and they're going to be over $300 by the end of the year for sure.
Nice,
Which
Nice.
is great. But like it's also kind of not great because like the numbers don't make sense buying another one of the exact same property you have.
It's
Yeah.
great when you're holding. It's not good when you're buying.
Right. Yeah.
Yeah.
That's the flip side of that is in a market that hot, highly unlikely you're going to get anything under market value. And that's the other way that you can produce a bunch of equity rather than actually getting appreciation. You essentially undercut the price and buy the equity, like I did with my deal. Like
Right.
the property's not worth 85 grand, and it wasn't when I bought it. It's definitely not now. So like that's how I insulated myself a little bit. Sure, I'm not going to get a bunch of appreciation down the road, but I got some instant equity up front. And that's something you can do in really any market, but super hot market's going to be very difficult to do as all.
Yeah. What was the other thing that I mentioned to you, Jack, that I wanted to touch base on? I don't remember what it was.
Me neither. I think you're talking about, it was like real estate YouTube.
Yeah, I don't know.
Anything else about Indiana?
I don't know.
I'm on
Who knows?
Zillow right now.
Yeah, we're looking at places.
I mean,
We're
I guess
gonna have some cash to invest here soon. So
Yeah. It's got to feel nice being on the other side of a merger, even if things are still locked up. Like that's got to be fun.
It is, yeah. And I think I'm going to be able to unlock some of that soon.
How
So,
soon?
Month or two.
Oh, nice.
Yeah.
So maybe so. Like,
Yeah,
what
I'll
are we
have more
talking?
details on it after it's all done. But yeah, I think I'll be able to unlock some of that soon, which it'll be really nice. Gets us figuring out a bunch of other things. I've actually just signed an engagement letter with a wealth management firm that is really interesting, which is not something I ever thought I would work with.
Yeah, that's why that decision. Just like so to
yeah.
take your risk tolerance out of it and let someone a little more conservative do it. Is that it?
There's a little bit of that, but there's a lot of benefits come with like a wealth manager that a lot of people don't see. I'm on the Fat Fire Reddit community, which is a really fascinating community whenever you start working in the millions of dollars range. And a lot of conversations happen on there, and people are like, why even pay these people? Because I'm going to be paying 1% in assets under management, which is quite a bit.
Right.
They're like, the investment portfolio is pretty much figured out. You can go to the 3-fund portfolio and it's like done and problem solved.
Mm-hmm.
But the investment management is actually a very small piece of what you pay them for. Like, yeah, it's interesting. They put together a pretty interesting portfolio, but then on top of that, what they can get you access to is investments that you can't get access to otherwise. Like there's a fixed income product that they have that earns annually 8% return that you can't get access to as a regular investor. They have some other private equity deals that they get access to. They also, because they, this company particularly manages over $1 billion in assets, they now can get like deals with banks. So like you can get a portfolio line of credit at the Fed funds rate. So I can get a portfolio line of credit against my portfolio at like 0.75% interest.
Yeah. Wow. So
it's that sort of stuff. And then
it's
on
more
top
like
of that,
it's more like 1.75. You had your fee, but still, that's awesome.
No, it's actually they don't have a fee.
No, but the asset under management fee is kind of, that's what I'm talking about.
Oh yeah.
If you kind of but still, that's like a great deal. If you
and the assets under management, like in my case, I'm talking about managing about $6 million. So like 1% is $60,000. Like you couldn't even hire one single person to do one of these pieces for that. And I have a team of like 6. The other piece that they do that I'm really interested in is they have a lawyer on staff, so we don't have to pay hourly rate, which a lot of wealth managers do.
Nice.
They have a lawyer on staff that does all the estate planning and all the trusts and wills and all of that stuff. They do insurance planning, and again, because they're big, they're able to negotiate like good rates for like umbrella policies and all of that stuff. They give you access to a lot of interesting things that I didn't think they did originally.
It's more the strategy side that.
Yeah, exactly.
Yeah.
And then on top of it, there's another person there. So like whenever you're trying to make stupid decisions, there's someone there to be like, hey, maybe that's not the best idea.
And that sounds like a sophisticated group.
They know what they're doing. I've interviewed quite a few wealth managers at this point, and like I planned on interviewing, like I had 3 lined up and I talked to all 3 of them. And then I was planning on having a call with me and my wife on all of them so that she could evaluate them too. And I'm like, I don't even think this makes sense for you to meet the other 2 because I like these other people so much better.
Sure.
So
that's cool. I mean, wanted to like, so you have the margin debt. That's great, or portfolio loan, whatever you want to call it. That's nice.
Yeah, it's in the like
you get tax strategy, you get maybe legal protection, asset protection,
exactly. Yep.
And anything else I'm missing? Like that. That's a pretty good package right there for
and all the investment management stuff too. They put together the portfolio and things like that. But they're an RIA, so like I'm still in full control of all of my assets.
Mm-hmm.
In this particular one, which I don't think there's a problem with saying their name, Crescent is who I'm using. They basically put in their SEC papers as an RIA that the only money that they make is from basically the advisory fees. So that 1% at my tier, which it goes down, of course, as you get ridiculously rich. But a lot of them, which I didn't realize this before, they'll give you like the that portfolio line of credit, but they'll increase the rate. Like M1 Finance, that's what they're doing. You're like, oh my God, 2% interest. That's amazing. But now I've learned that they're making 1.75% interest on all that themselves. Or 1.25.
What do you mean?
So
You mean that's just their spread that they keep?
Yeah,
right?
they'll mark up products.
Sure.
And this wealth manager that I'm working with has in their SEC filing papers
Oh,
that
they're
they
doing it
do
at
not
cost.
do that.
They're doing it at cost.
Exactly.
I see what you're saying.
The only source of revenue that they have is from their advisory fees.
Yeah.
Which is cool. So they're a fiduciary, and it's in their filing papers. So the SEC could come after them if they made revenue in any other way.
Sure. Yeah, I mean that's you're getting a lot for just for quote unquote just 1%.
Yeah, initially, 1% seems like a lot, but like some of the other wealth managers I talked to at my level, they were talking about 0.6, 0.8% cost, which is a lot cheaper. But then they don't have lawyers on staff, and
right.
The investment manager is like a team of people that they send stuff off to, and it's like you're going to end up paying a lot more. Whereas they actually have people on staff for all this stuff.
Yeah,
and then on top of it, they just manage a ton of money.
And the amount you'd save in interest on any loans plus any asset, you can't really measure asset protection, like how much you'd actually save if something bad were to happen. But then also I'm sure tax savings would become significant.
Yeah, they do all that. They're going to do all the
something.
tax planning and stuff. There
Mhm.
wasn't a whole lot of tax planning on this on all these private stocks that I have right now, but they're going to do some pre-planning now for the stuff that
that's good.
I'm leaving around and things like that. And then just access to private deals. They have so many connections with people at this point.
That's a big one.
They're working with certain family offices of big named things in the hospitality space to go and acquire distressed properties during this whole downturn, and they're giving you access to participate in those sorts of things, and that sort of access.
One of those deals could pay for the year fee easy,
right? And some people may be like, well, that's kind of shitty that there's only private access to only wealthy people or whatever, but that's how the game works.
Accredited investor,
and the only way to get access to that sort of stuff is through something like this.
Accredited investor, family and friends type stuff. It's bad.
Right. And even just past all of that stuff, the introductions that they could make to people.
Connections.
They manage the money of some of the wealthiest people, and they have over $1 billion in assets. You need an introduction to a VC or something, they can probably get that.
And that's what I'm trying to do with so we just hired an accountant for the first time this year to handle our real estate business taxes. And right now it's a net loss probably because our portfolio is one property and then our primary residence. So it's not really, the tax savings aren't huge from the extra shenanigans they can do, legal shenanigans. But they work a lot with smaller real estate investors, so they know a lot of smaller real estate investors, and they're planning on putting together luncheons and stuff once stuff opens up again. And that'll be, that value right there could be enough to pay for years worth of accounting fees on top of the actual tax savings they could do. So there's definitely a lot of value beyond just the actual service of doing your taxes or protecting your assets, whatever it is. There's a lot of value that can be had through just connections alone.
Yeah. And I'll say one of the best things I ever did was hire an accountant.
Yeah.
Justin will tell you how many times I've told him that's hiring my accountant's one of the best decisions I've ever made.
Especially in your case, because of all the stock and
this is going to be the first year since I started Greenbits that I had to pay taxes. So the first year in 7 or 8 that I've had to pay taxes
as a business owner, that. There's just so many deductions, even I don't want to say a fake business, but a business where you're delivering food. Technically an Uber driver is a business owner, but
it's also tricky too. In a small business, there's you can write off certain hours against your income when you're an employee, and all these certain situations that you're never going to get that unless you have a really good accountant. There's crappy accountants too. You got to have a good accountant.
I did income tax prep for low income folks in Chicago right before the pandemic actually happened. I think it was actually after and the first podcast we did, I think we did that in like November-ish or something like that.
Yeah, that sounds about right.
So or I guess that would have been no, never mind. I take that back. My timeline's all messed up. It was actually like half a year before that. So never mind. Wrong winter. COVID time, man. It was January 2020. So just to understand like a basic return with just a W-2, all the different deductions and credits you can get, it's just like that was a lot. and like the average person doesn't understand like their own basic taxes without a business. Throw a business into it, because we get Uber drivers who'd come in who maybe made like 10 grand, 20 grand that year from Uber. And it would take like 2 hours to like go through their phone, collect all the receipts, any expenses they had, and like just finding everything possible to lower the bill. And like, that's just doing that. That's like a normal 1099 sort of job, like, but you treat it like a business in the eyes of the tax authorities. So it's like the amount of sophistication needed and the amount of hours needed to do that. It's so gross. Like, it's my gripe with the tax system.
It is. Yeah.
It's just like so much manpower and brain power goes into this to game the tax system. And they design it that way intentionally. It's just like, if that could be used towards anything else. Like, I'm kind of feeding into the system as an attorney, but like, but I'm incentivized to, I guess.
Yeah. Well, and it's like I said, like it's how the game is currently structured. Like, you know, we can work to change the game over time, but you also got to play the game at hand, you know?
Yeah. And the incentives just aren't there for like every single lawmaker is a huge investor, at least on the federal level. Like, whether they say they're for the people or for corporations, no one's going to say they're for corporations, but you know what I mean?
Right.
They're all heavily invested, whether it be in real estate, stocks. What was it? The news came out, Nancy Pelosi invested like $100 grand into Microsoft right before the defense deal was announced. Or no, not 100 grand, like 10 million or something. Like a ton of money. I don't know why I said 100 grand. Thinking of the indie property. Many indie properties. She owns a bunch of Amazon stock, and she's not alone. They're all like that. She's just,
exactly.
She just happens
to
be
playing the game too.
That's why I'm like,
and they pick the rules. That's the difference.
I'm fascinated to see how this capital gains change goes.
I know. I thought
just can't see it getting through, but I mean, maybe.
They're
talking about some crazy stuff.
No,
like some really crazy stuff.
I think the taxes like those, they're not going to generate revenue. It's like a social engineering sort of thing. Money will go where it's treated best, and there are still tons of loopholes out there. People aren't just going to like, oh yeah, I guess I'll pay 50% in capital gains taxes now. They're not going to do that. Like, give me a break. They're going to do some other workaround, and then that will be the thing to target and complain about. And then, you know, it's just this constant cycle.
That was an interesting article I saw. I think the Wharton School of Business did this analysis saying that the capital gains tax change is actually going to cost $30 million or something like that. I could be wrong. It could be billion. I don't know.
What are they saying will add to the cost?
Unless he also removes the step up basis. Because he's basically posturing, which makes sense, that if he increases the capital gains tax the way he's suggesting, they'll just hold it.
Yeah.
And hand it off to their children or whoever inherits the money, and then they get step up basis, which eliminates all the taxes.
Yeah. A big one that I'm more surprised with is the 1031 exchange that he
I heard that with Kevin's video this morning, and I'm like, oh my god, everyone's going to be buying single family homes.
What happened there?
So the 1031 exchange, Justin? It's for those of you who don't know, it's where you can roll you can sell a property, and then all the capital gains are deferred. There's no taxes on it, as long as you roll it into another piece of real estate. That's kind of the gist of it. So you basically can get away with not paying taxes on your gains until you die, and then it's just passed to your kids. But because of the stepped up basis, they don't pay the taxes on it either. So it's this total intentionally built in hack in the real estate system. But what the Biden administration is proposing is to get rid of it on properties like over, I forget is it 500 grand?
Million.
It's $1 million. So properties over $1
million in profit, I think it was.
Okay, $1 million in gains. So so if you have more than $1 million in capital gains, then you can't defer those taxes via 1031. So to limit the scope of the 1031 exchange, because right now, if you had like a you were sitting on $20 million in gains and then you wanted to sell, you could roll that all into another property and not pay taxes on it. So like all you would do, at least this is what Kevin argues, and I would tend to agree, is you would just chill large transactions. Because like you're sitting on a bunch of gains on this $100 million apartment complex. Why would you sell it if you're going to suddenly pay a 49% capital gains tax or whatever it is?
Right.
Like you're not going to do that. So they're just going to hold forever. Enjoy depreciation in the meantime, which is another great tax benefit. And meanwhile, like now, the only way to get tax-free deferred gains would be through single-family homes or smaller properties. So maybe there's a bigger incentive to go for those. And we already have this very stretched supply for single-family homes right now, where it's very expensive to become a homeowner, more expensive than it has than it was just last year. Even with the interest rate cuts, like it's very hard to keep up. So it's like that seems very weird. Only because I know there's a lot of rich real estate investors in Congress, including the Speaker of the House. And it's like, why would you do just that part and not the whole part? Because if you're just trying to help homeowners or the little guy, like, what
it's
do
not
they
going
care?
to do it. Yeah, it's going to push the money in to compete with them.
You're funneling it towards the thing that now has the best tax benefits, which is single family homes or smaller properties worth less than, we'll just say less than $1 million. So, and it's just like, is that really what they're trying to engineer? Like, and because that's what the tax system really is. Like tax revenues. Yeah. Everyone likes to point to the 40s, for example, where the highest marginal income tax rate was like 90% or something like absurd. But if you look at federal revenues, like inflation adjusted, they've been the same. Like no matter what the tax rate is, federal revenue compared to like GDP is pretty much the same. Doesn't matter what the marginal rates are. It's because the tax system is filled with so many holes that the money just moves. It just moves. So the tax system really isn't a revenue generator as much as it is like a social engineering tool. And because like this capital gains tax, for example, it's not going to raise hardly anything, especially compared to the budgets now. but it's going to steer money in different directions. Yeah, 1031 exchange would do the same thing. You're going to have less sales at the top end, and you might have a lot more demand at the lower end of properties. Like that's all it's doing. It's not raising new revenue, but it's influencing the way people invest or spend money.
When I think if the capital gains tax change does go through, you're going to see a lot more money in private equity stay in private equity.
Yeah,
like
I wouldn't be surprised.
Far fewer companies are going to IPO and SPAC and all of this stuff because all the purpose of all those is to get liquidity. Now, if it costs us 50% to sell our shares, we're just going to keep our shares in.
That's a good point.
I really hope this thing doesn't go through and say that it applies to sales in 2020. I'm going to be really upset. Or 2021. I'm going to be really upset. It's going to cost me like $2 million.
The constitutionality of a retroactive tax, it's just like, I don't see how on earth that is constitutional because you have the right to due process.
It would hurt a lot.
Yeah.
And they're going back in time where you made a decision not thinking that this would matter. And now all of a sudden it matters. Like that's so grossly unfair. Yeah. I don't think they would do that because that's so politically gross, but it could happen.
Who knows?
We saw California.
We know, like, this thing was leaked out. It wasn't like some official thing. It was.
Well, it's not any different than what they were saying pre-election. He wanted to get rid of 1031. He wanted to raise the cap gains. It's all the same stuff.
It's probably some negotiating ploy for some other entirely unrelated thing.
Yeah,
some pork.
That's what I'm hoping for.
we love our pork in the U.S.
Politics. I mean, what are the chances of it passing, though? It sounds like there's just way too much opposition.
Well, my always thought with these tax hikes or any tax hikes now, it's like the same people who would say we can print money without consequence are the same ones who say we need tax revenue to pay for things. It's like, well, if money printing is such a miracle, why don't you just do that? Why do we have taxes at all? So people talk out of both sides of their mouths, and it's very irritating.
It is funny though. I was talking to someone about this the other day. I don't remember who. Like inflation, like the government prints money and causes inflation, right?
Right.
They also have this huge debt that people are always like, oh, the debt is so massive. It's the biggest it's ever been. And why don't we pay down debt? We don't pay down debt because we inflate our currency so our debt costs less.
Well, yes and no. The only issue that would happen is it's not like it's fixed rate debt. I think over half of the U.S. debt is short-term treasuries, so like
Yep.
1 month. So
Right.
that's variable rate essentially. That's rolled over into new bonds constantly. And now the Fed owns like whatever, I forget. I don't even know what the number is because it changes so frequently. The Fed owns a massive portion of the debt now. It's certainly it's absorbing like all the new debt. Foreign investors aren't buying new U.S.
No.
treasuries.
Yeah.
Like, why would you? You're making zero return, and like they're only going to make more of
Negative
them. So,
in
like,
some cases, I think now.
Yeah, negative real rates. Yeah,
Yeah.
Like, so it's like 0%, and then the Biden administration wants to roll out more gigantic stimulus programs. I mean, the last administration did the same thing, just on a lesser scale. Like, so it's like foreign investors aren't buying these things because like we're breaking trust every day with the amount of money we're printing.
Yep.
Granted, every government's doing it to some extent right now, but because all those interest rates roll over, as you print more money, there's not going to be demand for bonds. So the only way to keep the interest rates low is to continue printing more money to buy the bonds. And you're going to get into the hyperinflation territory, and that's not good for a government either. It's horrible.
Right.
Like that's pain and suffering across the board. So like you have to put a stop to it somewhere. I'm picturing more of like a stagflation decade, very similar to the 70s, where you could kind of call like this period sort of like what the 60s was. You had a ton of government spending, lots of new debt came online, the Great Society programs and everything like that, money that the US didn't have. Then, of course, we had leaving the gold standard officially in 71. And then, ta-da, we get stagflation for the next decade until we had to just jack up interest rates and let the thing deflate. We could easily get something like that happening again for this upcoming decade. You never know the timing of these things because everything's so odd. But that seems to be like an increasingly likely scenario that will happen. I'm not saying it actually will, but every new stimulus program or whatever program that keeps getting announced, it's just like, is this the goal? Like to get to stagflation, where it's just like the government is the majority of the economy. It's all inflated with fake new money, and it's like it doesn't seem like a future that people would want. But it's I'm on my soapbox right now, so I'll get off for a second.
No, it's good. I don't dig too
that's
deep into
interesting.
a lot of the inflation stuff. I just kind of like consume a lot of perspectives, but I don't really have much of one myself.
It's the only thing I think driving like the Bitcoin market, for example. If fiat wasn't so irresponsible with itself, then like you wouldn't need Bitcoin or anything like that, or really anything else that would hold value, because the currency itself wouldn't be constantly losing value. But that's kind of how the system's been designed. Like the Fed intentionally targets inflation. Like, since when is inflation a good thing? To your point, it does help debtors. It's not helping the general population, but it's helping people with fixed rate debt, which is generally a more privileged class anyways.
And that's where you get to the game and whether it's right or not, but it is
right,
exactly the thing, you know?
Yeah. The most eye-opening, maybe to put the inflation stuff to rest, is if you look at the second half of the 1800s, post Civil War, because Civil War had its own inflationary spiral because of the Civil War. So the North printed a ton of money, so did the South. So like you had a bunch of inflation there, but once that deflated, went back down to normal. The latter half of the 1800s, you saw the average spending power of a person grow tremendously, yet the government. So how do I explain it? We saw a net deflation throughout the entire century, but the second half especially, it's when kind of industrialization was really heading into its zone. To where if you were making the same amount of money in 1870 and you were making that same amount in 1890, you were probably more productive and everything around you was way cheaper. So your purchasing power grew tremendously and your quality of life was way better too. And that didn't require any inflation. What it required was productivity growth and people getting better. we certainly see that grow too with tech, for example. The amount of productivity we have with devices, it's unparalleled what we had like a couple decades ago, or really even a couple decades ago when we already had the internet. Things have gotten so much more efficient. Like that's productivity. That's what increases quality of life, not price growth by deflating the currency. And that just ends up hurting people who don't have, who have to buy, for example, where expenses are a huge part of their budget. Now all of a sudden your cost of living is growing, but your wages might not be growing very much. That's a terrible situation if you're in that spot. The only people it helps are people with fixed rate debt and assets, which is what the system is pointed towards. So, oh boy.
Do you own any crypto?
I own like $1,000, but like every day that goes by, like
of Bitcoin.
Yeah. Well, it's I think 750 Bitcoin, like 250 of Ethereum, so not very much.
So your Ethereum's doing much better than your Bitcoin.
It has been. I noticed that. And correct me if I'm wrong, I'm not too familiar with it, but Bitcoin seems to be more of like I see it more as like a digital gold, whereas Ethereum is more of a use case ahead of it. For example, if you've seen the NFT market spiraling out of control, but but that's beside the point. Like it seems like there's a little more of a use case for Ethereum, but I haven't looked too.
I think Ethereum would be a lot more of a currency than Bitcoin will. Bitcoin, like you said, will be a lot more gold. I am a little bit concerned lately with Bitcoin in the impact that China can have on it. I've been, Kevin O'Leary's been talking a lot about Bitcoin related to China.
Like mining there, you mean? Or
mining there is very questionable. And then just even recently, I forget what it was. There was something that came out related to Bitcoin in China, and Bitcoin crashed that day. Crashed. It's like, went down like 10% or something like that. But, so I don't know. I think there's a lot more Bitcoin powered by China than we necessarily believe, and I think that could be a potential risk. I don't know if it's a real risk or not, but it could be a potential one.
It could. I'm sure it is. The reason I put any money into Bitcoin is it's definitely in the speculative part of my portfolio, because we don't know if this will actually stick. Every day that goes by, it seems like it's more likely as more people get involved. But then again, like I'm sure tons of people got involved in Tulip Mania as well, and like look how that ended up. So the number of people is just one factor to look at. But it seems more and more compelling when you see how governments are abusing their own currencies constantly. Where you can have something decentralized. There's something sort of romantic about that for the libertarian in all of us.
there is, but when you start to like dig real deep on this crypto stuff, like Bitcoin and even Ethereum in its current state are never going to be very good for transactional things.
That's what it's.
So then you end up putting the Bitcoin Lightning Network on top of it, which is just a fiat currency based on Bitcoin. And then you're right back to where we started, basically.
It could be if there is a system that comes out of this, it seems like it would be like a Bitcoin-backed something, kind of like a gold-backed dollar.
Which is what the Lightning Network is.
Yeah, that's what seems like it's most likely to happen. Which anything to take the power out of the hands of central banks in that sense should be a positive. Based on what we've seen over the last
if that thing can be
years.
fully decentralized, I think it's good.
Yeah.
Regardless, I think like you're gonna see the government adopt digital currency in some way. Yeah,
but
USDC I think is a big.
But that's just
potential.
But that's just the same thing. It's just digital. I mean, I don't want to say we have a digital currency, but all the Fed has to do is
basically
put digits in the computer right now. So it's practically digital. Like they can do whatever they want. The whole appeal is not the fact that it is digital or even that it can be tracked. It's that it's there's no central body theoretically. Maybe there is that can totally manipulate the currency like that. You can get things on the outside trying to manipulate it, but there's nothing at that center that it can, like there's no top down.
Other than Elon Musk, nothing can manipulate it.
You get plenty of pumping in the meantime, but like the reason I put it in like mathematically, it's like okay. It could go to zero. I acknowledge that. It could also Bitcoin could become gold. Essentially, that's kind of like my base bull case. It could be much more than that, but it's like okay, maybe it becomes digital gold. In that case, it should like 10x from here or something like that.
Exactly. Yep. That's kind of my target too.
When I initially bought it, it could 20x. So that's some pretty sizable risk asymmetry in a pretty short period of time. So it seemed like a decent speculative play. But again, it could go to zero and very, very soon, or drop 75, 90% very soon, just because of how much, like, I don't want to say dumb money, but
That's great.
Yeah, exactly. Thank you. Hey, you do got Twitch people.
Yeah, see?
Thank you, Tarkov Rat.
Imagine accidentally adding a zero. That's amazing.
Like, for real. Like, but I don't even know if the economy would notice another zero right now. It's like, it's so ridiculous how much money has been thrown in.
It is. It really is. Yeah.
So, it's my final thought on the whole inflation discussion. It's like, actions have consequences. The government's taking huge actions that will have consequences and already have had consequences. And to pretend like there is no consequence is a problem. And that seems to be the narrative right now, which I'm concerned about.
Yeah. I totally agree with that. I'm very interested to see what the next 5 to 10 years brings in terms of financial policy.
It's definitely going to be turbulent. In which direction? That's the hard part to call. Like, maybe the government will stop because they're like, we don't want to do hyperinflation. We'll just have a depression. Like, they could do that. It could. There's this chance, significant chance. I don't think it's most likely, but it could happen.
Term of some presidency. I don't know.
I don't know. Elon Musk runs for president.
Like, no one wants to be the guy that has a depression.
Totally true, but like, you could have I don't know who I forget who the chancellor of Germany was, or when the Weimar Republic, when it deflated its currency, but you can have a hyperinflation depression too. It doesn't have to be a deflationary depression. Both are horrendous times to live through. Just pick your poison, essentially. Yeah. I'm not saying we get to hyperinflation, but things aren't going to be rosy when you continuously print forever, because actions have consequences.
Yep. Well, that was a fun conversation. I enjoyed that.
Me too.
That was educational for me. Yeah. Thank you, Jack.
No problem, Justin.
What else do you guys want to talk about? Anything? We've been here for over an hour, so probably about time to be wrapping up.
Yeah.
If you had final thoughts on something, does Tarkov Rat want to hear anything over on Twitch?
Yeah. Cool. Well, yeah. I mean, thanks for coming back. I'll try and send me a link to your new channel. I'm sure I can find it, but send me a link, and I'll put it in the description of the video.
Yeah, I'd appreciate that. Punch card.
If I haven't already, your link to your YouTube channel should already be in the description. I think I did, but maybe I didn't.
Awesome.
I don't know.
I appreciate that as well.
I have the kids all to myself this last week, so everything's been a little bit crazier than normal. This morning I was like, oh my god. Do you have an opinion on the worldwide ammo shortage?
Do I have an opinion?
I don't know that any of us know anything about that.
I know a little bit. I have a couple friends.
You know a little bit about everything.
I like this.
Educate us.
Guess what? I'm a jack of all trades, master of none.
Hey.
But I have some buddies who are very big into shooting. I don't know if I have an opinion on it, but it seems like it's just kind of in the same way that people will buy gold in a time of crisis, or maybe right now they're buying Bitcoin in a time of crisis. People buy ammo or food. We saw the same thing that would drive people to buy a bunch of toilet paper.
Yep.
Same thing that would drive gun people to buy ammo. and ammo prices have been incredibly high since the pandemic happened, but then especially once all the riots were happening in the US especially. So instability causes people to go to their sort of
it's like
primate brain, like conserve, protect sort of deal. Justin, when are you going to start posting again? I haven't noticed anything in a while.
I know. I've been quiet. I've been taking a lot of, time off from content production and also content consumption. I've kind of just gone back to like reading just regular old books. Yeah. And this year's, I met another startup too. So that's consumed most of my time. I want to say priorities.
Yeah.
I actually have been going back more to the written word, I guess I should say, actually writing. I've published a few things on Medium's publisher network.
Yeah.
And I've generated some revenue from that too. The
awesome.
the price per page view is decent. I haven't made really any substantial money from it, but I have made money just from members viewing my articles, and they've been on things based on my YouTube channel, like the outliner script that I would write for my YouTube channel videos. I would publish that, like fine tune it so that it's easier to read, and then publish that on Medium, and that would be, that was it. So I've done that a little bit this year when I haven't, since I haven't been filming as many videos.
And any tips for an aspiring Medium writer? I wrote one article months ago and got like nothing out of it. It was about investing out of state, actually, just to try it out.
I haven't. Mine has kind of been like the post and ghost method, where I write what I want to write, and whatever happens, happens. And I've had 2 articles get picked up by Google, and one of them is the first search result, and I've gotten a ton of traffic from Google. The other one is just getting circulated through Medium's algorithm regarding some finance stuff on cars. So unfortunately, I haven't been diligent on analyzing why things have been succeeding more than others. So I can't really offer advice there, but
sure.
I just write. I really just don't pander. I just write whatever I want to write. I put a title that I would click on, and that's kind
That's
of
how
it.
I do my YouTube channel.
Do you pick like publications or anything like that? Any in particular?
No,
free form.
I write. I make sure it's readable, grammar's good. I try and proofread the best that I can.
No, yeah,
kind of stuff. But
all the good fundamental stuff. But like
the fundamentals. But
when it comes time to publish, like how the Medium has like publications you could send it to specifically, right?
So right. I don't do that. I just publish directly to,
Nice.
I guess, my own page, and that's kind of it.
Cool. That's awesome. I need to look into that more, because there definitely seems to be some good potential there, and it's like another point of contact too.
I was somewhat surprised too that I guess Medium is still doing well, because the written word, I don't think will ever go away, so to speak, but I didn't expect it to have as much traction as it does, and as it still does, even though Medium has switched to more so of like a pay to play or pay to read offering. But like for a long time there, I paid, and I felt like I got a lot of value out of the articles I read, because there were some well-known authors that I followed that were publishing exclusive articles there. That was kind of like my go-to thing, weekly or even daily, just checking out new articles on. I was reading a lot of things in the philosophy section and psychology and stuff like that. So I've surprisingly, I feel like Medium's kind of under the radar, but they still have a lot of valuable content in there. So
good deal.
Yeah, something to consider.
Awesome. Yeah. Is it Justin Gabriel Medium? Looks like
I have Justin to Driving as well. That's where I publish some car related things.
So you have two different pages then?
I have a personal one where I published more of my thoughts on my marketing philosophy. And it's almost like anti-marketing, because I think marketers ruin everything at the end of the day. Like the telephone was ruined by telemarketers. Email was ruined by people trying to do email marketing. Now we're ruining text messaging. As a marketer by trade, I just feel guilty that we're ruining a lot of these channels that people communicate. So it's my take on, an honest take on, even things of like, if you want to be a marketer, you don't really need to study it in college. I actually recommend if I were to do it again, I would rather study psychology or even just history.
Oh yeah.
If I knew I was going to be a marketer.
Retweet that. My goodness. Like I took 2 marketing classes in college, and like never once did we mention SEO. Never once did we, once we went over a very old like marketing example, but like number one example for any sort of marketing case study should be Elon Musk. Like the guy's built a brand with like no marketing budget, like or like really any of the big personal brands, like none of the stuff that really matters. It was just all like definitions, like the whatever it is, the 4 P's of marketing or something like that.
There's 5 now.
Is it 5?
Like,
yeah,
excuse my language, but there's some bullshit of 5 now. They're just trying to add it on, but
it was so frustrating.
90. I'm confident that 90. I had some phenomenal professors, and I greatly respect them. The curriculum, though, 99% of what I use effectively day to day I learned outside of college regarding
Mhm.
marketing fundamentals, tactics, and strategies. None of that was taught in school. Marketing is, as with many other fields, it's always changing.
Yeah.
Like, and the fundamentals
Right.
the fundamentals they try to teach in school, they obviously change, because, and fundamentals usually should not change. Like, why did they add a fifth P if it was a fundamental, you know?
Yeah, right.
So I'm like, I've even gone back, I'm like, if I were to teach a marketing course in college, like, one, I don't think you would need to, but if there was like a fundamentals marketing course, it would be really hard. It'd have to be a course that would have to change every year, because the
Mhm.
marketing landscape
Yep.
changes every year with tools and automation and tactics and strategies. Like, it's always
I
changing.
think the best way, really, with any business, this is why like businesses do case studies. It's just to look at examples. Like, I don't think
Right.
you figure out lessons from the examples, because like you said, things change a lot in anything in business, marketing obviously being one aspect. So looking at examples in real time is probably the only way to do it, because looking at some Google ad campaign from 2010 is going to look very different than now. And that's probably better than what you get at most schools looking at something like that.
Yep.
So yeah, I totally feel that.
Yeah. It's so yes, going back to the question, I have one, my personal page where I just publish my thoughts on marketing, and then another, the car related one, which ties in more to my YouTube channel. That's the one
Mhm.
that's actually been making or generating revenue, I guess I should say.
Do you so you include your videos and stuff in it, or something like
I'll
that?
link them. It doesn't look like I get any views from them, but the analytics on Medium are quite nice as far as read time and kind of just seeing how many people engage with it, how much time it's much like a video analytics that you would expect, but you see it for the written word. And that way
Right.
too, you can break it down by like how many seconds someone spends on the page, and then how much revenue you generated and stuff like that.
Sure. Send
And
me that. Send
I
me
think I'm
your
yeah,
pages. I'd like to
yeah.
take a look for sure.
I think I'm just better at the written word anyway. That way I can, like, I enjoy making videos, but more as a creative outlet, I guess I should say.
Mhm.
Informational type videos I do enjoy
Mhm.
every now and again, but I haven't done anything this year because it's just been a little bit crazy with other priorities. And then when I do have the time, I just feel like sitting down and writing.
You can communicate so much more writing as opposed to video. Not that video is not valuable; it's valuable in a different way. Video is good for like the one simple point, but if you want to get into complex ideas, writing tends to be so much better for that. Because trying to speak through a complex idea, it's like one of the most difficult things to do. That's like why great speakers are so like heralded, because they can communicate maybe a slightly complex idea and break it down, which is a lot easier to do writing, partly because you can go backwards and edit and really work through it, which you can't
Yeah.
do speaking.
Yeah.
So,
Yeah. I'll shoot you those links and take
yeah,
a look.
please. Yeah.
And
Well,
it's very easy to get monetized on YouTube, or not YouTube, but
Yeah, not
Medium.
YouTube. Definitely
Not YouTube.
no, man, YouTube's a
Medium,
Definitely
grind.
not YouTube.
it takes like 15 minutes on Medium.
It takes
I'm
like 15 years. on YouTube,
yeah,
I think.
I'm at 16 months now, and I'm probably like 45 days out from monetizing, I think. We'll see.
I'm
But I gotta
currently
get that watch
infinite
time.
days out.
You gotta get that sub growth.
My
Both you
watch
guys,
hours
you guys are getting
my
there.
watch hours have not increased.
Oh no, you're like stagnant on watch
Because
hours.
I'm rolling off. Like my
Yeah.
average watch hours per day were the same a year ago. So I'm rolling off as many
Ouch.
as I'm adding on every day.
And shorts don't count towards that.
Shorts don't count towards that,
Yeah,
which
that's
really
what
kind of suck, because I actually have a decent number of watch hours from shorts now.
yeah, right. So
So
gotta-
yeah, that's fun, but I don't really care.
you build up the base of viewers. That's the hardest thing to do. The watch hours come with
Yeah.
that.
Yeah.
So
Yeah.
as long as you're making progress there, you should be all right.
Both you guys are well on your way. You're right
On
there.
the exponential curve.
I'm excited to like start the next business and be able to like document that process.
Yeah, that'll be great. I want to buy another property, but it's like, ugh. First off, I need more cash, and like I need more cash now just because how the market is.
Yeah.
So it's like I'd love to do something like that. It's been so cruddy for content over the last year, just because there's only so many things you could do in the real world. Everything's at home, and it's like,
no, exactly. Like that's one of the big challenges. Like I want to do some like collabs and stuff, but collabs are really hard remote.
Mm-hmm.
Like if you can get someone in the same room and talk, like that's a little bit different.
Or like go see what they're doing. Like
yeah, exactly. Yeah.
Like I'm in Chicago, but
yeah,
I can't even I could hardly show that I'm in Chicago. I'm just in this condo.
Yeah.
Like there's lots of cool stuff in Chicago, or like, you know, and I can't really show that. I'd love to do a day in the life of a real estate attorney, because I'll be in the Sears Tower, aka Willis Tower.
Yeah.
Like that's cool. I want to share that experience, like, because I'm like, but I can't do that right now because everything's at home.
Yeah.
So stay tuned, I suppose. We're almost there. We're almost there. Vaccines rolling out.
We are getting pretty close. Yeah.
Yes, sir. All right. I don't want to take any more of your time. We're 20 over now.
This was great, Jack. Thank you.
Got to hang on for just one more minute, and then you'll officially be the longest stream we've ever done.
Oh, really? What was our first one?
Our first one was only about an hour. I just looked it up because I was curious. I'm like, man, we got to be rolling up close to like the longest stream we've ever done.
Yeah, we got to do it.
And I ironically, I think the longest stream we ever did, Justin, was just me and you.
I'm not surprised. We have some rambling ones.
It was the one we did about Risk. Where's it at? 1 hour, 21 minutes, and 27 seconds.
Oh, we got 27 seconds to go.
Yeah, here we go.
So we're about to roll into the longest stream ever. It's been probably one of the most educational streams we've ever done too.
Yeah, I learned a lot.
Good stuff on inflation there.
Again, selfishly, I love this podcast because I get to sit back and learn.
Me too. Anytime I invite someone on this podcast, I'm like, just so you know, like probably no one's ever going to watch this. It's just our excuse to talk to interesting people.
Right on. Yeah, I enjoyed I enjoyed the whole talk. Like it's interesting hearing other perspectives and also trying to articulate my own. And now I'm very proud that this is the longest episode ever on the Financial Illiterates. So
yes, exactly.
Congratulations, team.
We did it, guys.
I wish I had some confetti that I could overlay the stream with, but I don't. I wasn't prepared.
StreamYard has the capabilities, I'm sure. You got to figure that one out.
Thanks
so
next
time when we get to an hour 30, have that confetti ready for me.
Exactly. Yes. Well, be sure next time you're on, I will have some sort of confetti.
Oh, that'd be excellent.
We'll have to like pop champagne bottles or something.
And we have to
over the top, but
yeah. maybe it'll be in person. Maybe.
Yeah. Who knows?
That would be wild.
That would be
quite some coordination to pull that off, to get all three of us in person.
I want to go to Chicago, we'll go to Chicago.
Sure, go ahead. You're invited. One last thing about coordination. Yep. So that 5-person channel, we have myself in Chicago, a person in San Francisco. That's the easy part. Then we have someone in the United Arab Emirates. Then we have someone in Australia. Then we have someone in New Zealand. Jeez. And there is 1 hour in the week where we can all actually do something.
Wow.
It's 9:30 p.m. my time, which is
that's tricky.
Which is 2 hours earlier in San Fran. It's like 6:30 a.m. in the UAE, and then it's like midday in Australia and New Zealand. So
wow.
This is an international podcast.
It's a worldwide. It's cool.
Worldwide. Yeah,
I love it. All right, I'll leave it at that. Thanks, guys.
Cool.
And,
thanks for coming on again. It was a good talk as always, and we hope to have you again sometime in the future.
That would be great. I'll see you guys around.
Thanks, Jack.